like a daddy Mac. Dan's 30 years got our way, trading life and markets every day. Rusty's chained to the mines, digging deep day by day. But when Option Omega releases new features, he's free to come out and play option. Omega, you're trading home, where every move makes you feel less alone.
Good morning, everybody. Hope you guys are doing well. We got 45 people on the screen today. We have an army of options traders today. Just an absolute unit, as they say. Hope you guys are doing well. As you know, we got Dan Sheridan, the Godfather. We've got Rusty, the Architect. We've got Matt, the Glue. We've got Troy, the Moron. And we have a very special guest, Connor. Connor, will you introduce yourself to everybody real quick?
Yes, sir. So I really don't know how to start about, I don't know if everybody knows who I am or not, but really how I started getting into zero-day options is I'm sure everybody here knows Mark Anderson. So me and Mark worked at a company called Rippling together, just an HR and payroll company. We were on the SDR team together, and I was doing a lot of LinkedIn stuff at Rippling for that time. And Mark reached out to me once he left Rippling and asked if we could work together. I said, heck yeah. I mean, I would always love to grow and build something. And yeah, about 3 months into working together, he's like, hey, do you want to learn how to trade options? And I was like, why not? I mean, to be completely honest, to give you guys all my background on options trading, only trading experience I've ever had was I had a Charles Schwab account at that time with about $1,000 in it that my dad set up for me because he's been doing that for 30 years. So he just set that up for me. And basically that's all the experience I had. And I'm sure if anybody that is aware of Mark Anderson has followed the series, I mean, I think I've been trading for a little over a year, about a year and a half now. So yeah, that's a little bit about my journey. We started with a 30K portfolio, and now we bumped it up to, we're running a 100K portfolio right now. And yeah, it started out just learning some iron condors and stuff like that. Now we're running a little bit more orbs, EMAs, and a little bit more trendy trades. It's just kind of compilation of them all.
And Connor, when you say the series and Mark Anderson, I think you're right that a lot of people know. There's some people that have no idea what you're talking about.
Yeah.
So can you just explain what is the series?
Yes.
Who is Mark Anderson?
So
For those who don't know.
Mark Anderson owns a zero-day hedge fund called MBH Capital, and we have a YouTube channel called Zero Day Mark. And we started a series where he thought, because when Mark would get on there, we started the YouTube channel. I was like, at first he had me editing the videos. I'm like, Mark, you don't want me editing these videos, man. I have no artistic ability whatsoever. But it started out kind of rough, and Mark was just, talking about what he was doing. And I think a lot of people wanted it to be dumbed down a little bit because we all know Mark's super smart. So he brought me in and he's like, hey, can I teach you what I know so it can relay better to the audience? And so that's where I came in, and we started this series. It's called, Hedge Fund Manager Teaches Newbie How to Trade Zero DT. So if you go to Zero Day Mark YouTube channel and you look at the newbie series, it's been going on for probably about a year and a half now. I think we're figuring out what to do with it next because we kind of closed it off with the 100K portfolio, showing everybody that, and we're still figuring out what's the next steps with it. But yeah, if you're interested in learning what we're doing, go check it out.
Connor, what's been the hardest thing or the most intense thing about learning options so quickly? Because you jumped into the fire. It's not.
I did, man. I'm not gonna lie to you. It was like listening to Chinese the first day.
Yeah,
I did it, and Honestly, I would say the hardest thing for me was just understanding the vocabulary of it all. Like, what did bullish, what did bearish mean? What did even iron condor mean? And then, because I've always liked numbers, I kind of understand like the number side of it, but just understanding the vocabulary of it all. And I think that really started breaking down. And I would say deeper than that, understanding the theory behind everything. Like, what is, all right, I know how to plug this trade in, and it's going green. All right, that's great, but what is this trade doing? What does this trade even mean? In the market. And because I think like that's where a lot of newbies fail a lot, is they become backtest heroes, and they think they can create a bunch of backtests, but they don't even understand the theory of what they're doing, and then they go dump 30K into the market, and they lose 30K in 2 weeks because they don't understand what they're doing.
We're aware of that.
Yeah.
That's why we've tried, we've got 300 YouTube videos, a whole class on how to use backtester, presentation, a community. But you're right. I mean, people want to take shortcuts, and there aren't really shortcuts you have to learn. What were some of the unlocks for you where
Sizing is for any newbie? I would say just beware. Don't, just because let's say you find a backtest that has a 25% PCR and like, let's rip this in and make the most money possible. I would say Mark taught me how to forward test instead of just running with a back test and putting 4 contracts on it and just going with that. Like, so what we start out to do is find a back test that has edge, start it out with 1 lot, let it ride for 2 to 3 months, make sure the trade logs are adding up. And if the data is adding up for 2 to 3 months, then you can start looking at the sizing, maybe a 10% increase, but still don't go above a 10% increase when you're looking at your sizing. And we learned that. I mean, a lot of people I think we really started seeing yields from our portfolio. We started in July of 24. I don't think we really started seeing yields from our portfolio until like February of 25. And that's when it really started taking off, because we had to get our sizing down. It took us about 8 months to get our sizing down because we had our portfolio set up. And I mean, there's more than sizing. It's making sure that the correlation with the portfolio is working out, and there's a lot to it, but I'd say that was the big one for me.
Hey, Matt, wouldn't you say that? I mean, what you're describing, correct me if I'm wrong, it's just a craft like anything else, and part of it seems, doesn't it, like common sense? Okay, before you increase your size, maybe have an idea what you're doing.
100%.
Right? I mean, it's like, I want to be, you come out to the south, you get some land, you want to be a farmer, from the north, and it's like, let's go.
Yeah.
Right? Maybe go for 6 months and have a clue what you're doing, and then go. And I think what you said is so we're not going to increase our size for X amount of time until we prove the results, because I've noticed a lot of people tell me what you're, what's that saying? A blind squirrel could find, whatever.
Yeah, find a nut every once in a while. Yeah.
If you put like a range bound trade on, or you're selling premium and the market's quiet for 3 weeks, which it can do at times, you're ready to sell the house, the family, the kids. And you're like, well, let's wait for a little more challenging period. And let's see if and then I've always liked that. Increase your size once you've had a little adversity. And like you said, going 3 months, that was perfect. I think it's wonderful what you guys did. Would you say most of your trading, has it been under 5 days? Did you play around at all with 30-day stuff, 20-day stuff, or
we really don't, just to stay on brand? I mean, I'm not saying any of those things is wrong. Like, obviously 1 day, 1 DTE, 2 DTE, all that stuff is great trades, but we're really, I mean, Mark, the 0-day mark. So we really try to focus in on 0-day trades. And the reason why Mark's philosophy behind that is just to eliminate the overnight risk. I think we do have one a simple moving average trade on our portfolio that's like a 100 or like a 365 DTE or something. It's a wild, like a random one in there, but outside of that, we really just try to stay away from the overnight risk and stay focused on the 0 DTE. I think this is something Mark really believes in, and again, not saying one way is right over the other. It's just something that we've really just ran with.
But you know what? That is when you agree, I mean, on 0-day options, that is the Super Bowl. The Super Bowl is no overnight risk. And you can, it's like scalpers before they had 0-day
100%.
scalping. Okay, you go home, people in the pit, you go, you try to make $300 in a day, no overnight risk, no volatility risk.
No.
And that's really, you're eliminating volatility risk, you're eliminating price risk, you're eliminating everything.
Yeah.
And I think that's wonderful. Yeah, you guys,
And exactly like what you're talking about, Options Omega is like, for me, it's helped me learn so much because I wasn't really taught on candles or anything like that. So just understanding all the filters I can use in Options Omega, like you said, it can eliminate so many risks in that one day. You can put as many filters as you need on there to make it sure like, hey, this trade might even launch today because I have all these filters. So it's like, even though if you're doing 0-day, this trade may only launch on a Monday or Wednesday or Friday, whatever it is. So you still can eliminate a lot of that risk as well. So you're not going in on a really bad day and you just tank and lose your butt on that.
Yeah, I'll just say one last thing. I look at the Option Omega. People say it's a backtesting tool, which it is.
Yeah.
But for me, it's a risk management tool. I mean,
100%.
I could care less about a backtesting tool if you couldn't put in risk management. So that's what makes it so powerful to me is the fact that you got these rails that better than most all risk managers. The reason it's better than any risk manager is that not only does it have the rails, but it'll do a much better job of watching it than you would do it, right?
100%.
Because it's it's automated. It's not going to go to sleep. It's not going to go for a 2-hour lunch break. It's wonderful stuff. Anyways,
Connor, when you started, what trades, as you were learning, were there any trades that Mark would show you that like your emotion kicked in and you saw like the risk reward and you're like, I don't like that trade. That's a stupid trade. Don't do that trade.
I'll tell you, and to be honest with you, and I'm going to say Mark is, I'm going to say this first, Mark's way smarter than me. So I trust what he's saying over what I'm about to say right now. So when he showed me the 932 all in at the open and then the 1015 trades, those gave me so much anxiety, honestly, because they would either win really big but when they did draw down, they drew down hard. And I was like, man, it's a lot of money to be losing in one day. But then you got to go back to the 5-year data, right? You gotta trust the data. These trades are like the cornerstones of 0-day options, all in at the open. Those are things that he was the first trade he ever showed me, so that was the first trade he ever showed me, but we're launching it. We just relaunched it again last week. And it's one of those trades where it won 500 one day, lost 1,200 the next day, won 500 again the next day. And you're like, all right, those 1,200 days suck, but you see the math makes sense. If you can pull 400-500 days in there and you lose 1,200, you're still up $800, and so that is the one where my emotional bias was definitely kicking in, because there's been a couple of them where I just want to turn the thing freaking off and just run the ones that are winning. But you got to trust the correlation of the portfolio.
That's always the dangerous part, is when I'm trying to figure out just do. I would like to just do the ones that are winning, please. That's the But that type of trading, I mean, and Mark is kind of a master at this. Like that type of trading is all about numbers. It's about occurrences. And so each trade, you almost really do have to get super detached from each individual trade.
100%.
Because the numbers are what you care about. The numbers are what you're passionate about over time, the occurrences. It's not the individual thing.
I mean, I've got to the point where I'm almost detached myself from my portfolio a little bit, because it's like when I was checking it every single day, every minute, it's like there's too much emotional. There's no data in that. There's too much emotional bias in that. Like I'm just need to be better at trusting. I learned really quick. I need to be better at trusting the data, trusting Mark's advice, and then letting it ride out. And I'm so glad I have, because it's definitely paid off.
That's awesome. We're going to look at two tests here in a second that you sent over, but I wanted to ask, people are interested, the last 2 weeks, have been pretty challenging for a lot of people in selling premium in the options market. What how has it been for you? Has it, you know, and if it hasn't affected you, that's awesome.
No, I mean, I feel like I put my foot in my mouth a little bit yesterday when I was talking to you, because I was like, I don't know how bad it has, but I've been pretty busy with work, and then I looked at it and was like, yeah, it did affect me, because we had a pretty big drawdown. It affected me early in the week. It was when we started, so we kind of took off when the volatility was super high early in like March and April. We kind of pulled out of the 932 and the 1015 trade, and then we started bringing those back in now. And both the 1015 and the 932 hit hard on Monday, and it might have been Monday or Tuesday. I think it was the 22nd. Tuesday, yeah. And that one, that was a pretty big draw for me, I'll be honest. So, but again, I'm looking, I re-looked at the data, went into options Omega, looked at the trade log. The trades do match. You know, those both did lose on the 1015 and 932, both lost on those days. So it just goes back to removing that emotional bias, you kind of licking your chops and just trusting that it's gonna bounce back. And it did. I won 4,000 yesterday. So it's like where it's coming back out of the draw. You know, I mean, it was a big draw. I think we lost like plus 10,000 that day. So, and we're coming back, but so
yeah, it happens. Well, I'm going to look at two tests. Do you want to look at the bullish one or the bearish one first?
Let's do the bullish one first.
All right, give me 1 second here real quick. You said bearish first? Sorry.
Bullish.
Bullish.
Yeah,
okay,
bullish,
perfect. All right.
Yeah.
Okay.
Awesome. So
Connor, what are we looking at here?
Yeah, so just to kind of do the basic theory of it, it's a open range breakout. This is one of, if the audience has followed the series, you guys are very familiar with this trade. We talked about it a little bit, but for anybody that hasn't seen this one yet, it's just an open range breakout trade. It's a high only one. So basically what that means is during the times of 11:30 and 3 p.m., we're going to take the highest price, and our action is going to be triggered during that time of selling a put and buying a put. And the way we win on this trade is if it stays high for the rest of the day, eventually our trade will expire out, worthless, but the premium that we collected, we'll be able to keep that premium. But if the market tanks, well, we obviously lose our butts on that. But so yeah, I like this trade. To kind of go more into depth of like why I really like this trade. It's a low drawdown trade. This is a perfect example of forward testing, because you can launch this trade with one lot, and you might see, oh, well, it's only collected me $17,000 over 3 years. But if you bring this up to 3 contracts, it's a $60,000 profit on it. So you're still adding a nice profit to your portfolio. And I think it's just a perfect example of everything that we were just talking about. You can launch a trade very small. It wins a lot, as a 70% win rate. And when it does lose, there's not a big difference between the max winner and the max loser. So you can come back pretty well. I feel like for people that have a lot of emotion tied into their trading, this is a great trade for you as well, because you'll look at the trade log and you'll see, wow, I lost $500, but I just put together six $300 day back to back to back to back. So it's like, you're not going to feel beat up holding this trade that long. And it's something that you can continue to scale without, I can say that you can continue to scale without losing your butt on, I would say.
Yeah, for sure. Guys, any questions about this one? Any thoughts?
Yeah, I mean, Connor, just it looks. I like the trade. Just a couple questions. What was as you were developing this? What were your thoughts? Like, it's 150 wide, which is going to eat up a lot of margin.
Yeah,
150 wide. I mean, I get it. Your long is like, I don't know what you're paying for it, but probably not too much.
Yeah.
Did you look at was it that big a difference? Did you look at it like maybe, 100 wide or 75 wide? Or
we've played with it a lot. We've played at it with 50 wide. We played at it with 100 wide. And really it just came out to the data that this combo meant fit best for our portfolio, because we are really wanting something that won consistently in the morning. You know, like I was talking about, we have the 932 and the 1015. We're hoping that this one is gonna, if we do have a bad day, this one can collect some premium and wins for us on those two. And it really just fits into portfolio really well for us, just because when you can see the trade log right here.
Yeah.
You win 150, like you were talking about earlier, you win $200 a day. That's a great trade, you know?
Oh, yeah. What was the typical delta on that? Would you say maybe 5, 10?
Yeah, I think it was like a 5-10 delta, something like that, around those areas. And, you know, we're not too far into the money too. So we're still kind of playing a little bit out of the money. So we're not doing too risky of a trade. So yeah, that's really just been most of my theory behind it, is just trying to fit what trades make sense into portfolio, honestly. Like if we can, we're putting a lot of risk with the 932 and the 1015 one. If we can have some little easy winners, like Mark likes to call them base hit trades, this is one of those base hit trades for us, basically.
This is going to be one of those things where you look at it and people who got stopped, you know, Stopageddon, as we're calling it, copywriting it, you know, the thing that scares people, I think, is like that stop loss is kind of like a set, you know, that's kind of your risk management.
Yeah.
And I wonder, did you guys have any trouble with any stops getting, you know, blown through this last couple of weeks?
Not really, because I feel like Mark has done a really good job. I mean, Mark has helped me out a lot figuring out the sizing and figuring out making sure the stops are set up, because we dealt with that a lot when we started out our trade. When we started this portfolio, our stops got blew through all the time, and we got hurt really bad with that. And I think Mark has really, I don't know what he's done on his end, to be completely honest, but it's whatever he's done, he's made some fine tweaks to help us out, and we really haven't been hit too hard on it being blown through. But to let everybody know out there, we definitely felt it starting out. Like we had multiple times where our stops got blew through, and I was like, Mark, what are we doing here, man? And, but no, I mean, I think it's just the adjustments he's made. I mean, of course, it still does happen, but it hasn't been for a little bit for us, honestly.
Yeah, and so no worries if not. But are you up for us sharing this test? Is this something you guys do publicly?
Yeah, this is on our YouTube video, so you guys can share both of these tests. Yeah.
Okay, cool. I'll put that out there. And then let's look at the bearish one real quick, if it's okay.
Yeah, let's do it.
Because people aren't used to kind of the bearish orb. So
and I'll honestly give out the shout out to our audience, because when I first launched this one, it was a high only as well. So basically, just to explain the theory behind it, it's the inverse of the other one that we just showed. This one is a low only. So the lowest price, you're gonna have the action of selling the call, buying the call, and you win by if it's staying low the whole day. You lose if it strikes up. But just we really had it high only on there because I was just trying to mirror the other one, basically, and just do a bearish bearish version of it. But then our audience was in the comments like, hey, if you guys put this as low only, it performs a lot better. So I listened to him, I put it in there, and it really has performed a lot better. So it's pretty similar. Has the same amount of occurrences. It's a low draw. Actually, the P&L is better on that one. It has a good capture rate as well. But the issue with this one, and I do just want to be clear, I think everybody can see it, the max losers, it's a big difference. It's not the same trade. This one scares me a lot more than the other one, because if you lose on this one, your average winner is only $41. So you can lose big on this one. So this is something that, you know, we definitely continue to play with and definitely fine tune, because if you have a $1,200 loser, that can hurt you pretty bad. And when most of your winners are only, you know, $100. But again, you look at the win rate, it's 98%. So most of the time you're winning close to $100 a day. So you can collect that premium back, but you got to be aware. If your stops get blown through on this one, it's going to hurt bad.
18 to 20 times taken to recover.
Yes.
You know, on that.
Yeah. So this one is one that, to be honest with you, I'd be when it's performing well, I'm probably keeping it on. But if it starts showing me anything else, I'm probably going to turn it off.
Well, that's the funny thing about that. You think about it, the most dangerous thing, out of these two is not going long.
Yes.
That's the funny thing about that type of, we've seen this from our own research. We talked about this actually a couple of weeks ago on orbs. Orbs in general, like usually how you play a low breakout orb. I mean, I'd say generally, like what I have found is a lot of times it's almost easier just to go long with the low breakout orb because the reflexivity of it has a potential,
You're going to be able to collect your premium back if you do have a really bad day by going long with it, rather than if you're just playing that short game, you can snowball really fast, and I've seen that too. I've definitely seen when we try to play short too much, that's when we start snowballing and we're like, all right, let's just get back to what was making us money before. And that's just going long.
Yeah. The market just goes up.
Yeah.
And that's someone who is a bearish person emotionally talking, as far as, physically talking. The market just goes up. Real quick, Connor, I didn't even get to say this. You're from Chattanooga, so I've always wanted to ask. I've never really got to talk to anybody from Chattanooga. What does it feel like being in the second best city in Tennessee?
Wow, I love that. I love that.
That's the truth right there.
That's right.
Still the first.
Hey, go Vols.
Hey,
Go
go
Vols.
Vols, but
I was going to say, you better say go Vols or
I'm
else
scared for
I'm
the
off
rest
this
of our
call.
season, boys. I am, man.
Oh yeah, no, it's not going to be a good season. Like Kentucky.
No, listen, we're going to go into Florida. We're going to win. That's all that matters.
Oh man, I just hope we don't drop Florida and Oklahoma. I probably won't watch the rest of football season if that.
Listen, we've got Florida, we've got Oklahoma, and listen, I know what I'm saying. I know this isn't popular.
Don't say Vanderbilt.
You know what I'm saying.
I know.
I'm off
if
this
we
call.
lose to
If we say
Vanderbilt, I
Vanderbilt.
won't watch college football.
Vanderbilt can beat anybody. Vanderbilt can beat anybody. I mean,
Well, they've got a quarterback who's like 95. I mean, he's been playing forever. He's a grown man. It's not fair. It's not fair.
I agree.
Get out of here.
The average age of a college athlete is, they'll be 30 years old pretty soon. The guys that aren't going to make pro.
He's got grown man strength.
Yeah, I know.
Hey, Connor, can I ask you one more quick question, if it's okay?
Of course.
When you're looking at like these two tests today, very good, very easy to understand. Would you say that any test that you're going to trade, would it be fair to say they're not standalone? You're comparing them with the portfolio. So you've got X amount. So like when you take the bearish one or the bullish one, like you commented, hey, I'm fine with it being 150 wide on the put one because it's blending with this whole pot of soup, right? So everything goes into the pot of soup. And because some people look at maybe one of these trades and they'll say they're looking at a standalone, but you're never looking at a standalone. You're looking at with this pot of soup, there's this little bit of paprika or whatever go with everything. Is that fair to say?
100%. Actually, if you follow that series and you watch the series, Mark showed us we got it from Trade Busters, David. It was an Excel spreadsheet that he shared. It was like the portfolio one where it shows you your correlation. It shows you everything, how all your trades tie together. And so basically what we're doing is every time we run one of these trades, we find edge. We like the trade. We think it fits into the portfolio. We're throwing it into that Excel spreadsheet, and it's showing us how correlated it is to our portfolio and how it relates to it. So it's all data driven. It's never like we're looking at the standalone trade. I mean, we'll look at the standalone trade to see if we like the trade and see if it has edge, of course. But then we're not just running with it. We're plugging it in. Like how much buying power is it using up? We're looking at all of that for the portfolio's sake.
Great. Thanks.
How often do you guys, your videos, how often do you guys put videos out?
Me and Mark, we were doing it. We're cranking them out there for a little bit, probably one a month on the series trade. He does like 4 or 5 a week. He's
a machine.
Yeah, he's a machine. But
light horses, all that stuff.
He's always cranking them out. But so I would say we put out about one a week, and now we're trying to look to, since we kind of closed out that ideas for the series. Yeah.
That's awesome. Well, listen, I love the idea of learning together through time, and then those type of YouTube things. That wasn't around even 8-9 years ago. I mean, when we were learning options, when Rusty and I were doing it together, like there wasn't people just sitting there learning the stuff. You know, you kind of had beacons, like shout out Tammy Chambliss, who would put their stuff out. Obviously you had Dan, you know, who was kind of a mentor, but you didn't have people that were like completely new. And so there's a freedom when you see someone completely new and they're messing up and they're asking all the emotional questions you ask. There's a freedom to be able to watch that and be like, okay, you know, you learn a lot from watching other people struggle at the same level you're at. And so I think that's an awesome idea for a series. I think you guys did awesome with that stuff.
I appreciate that. And that's all we were trying to do, is just trying to connect to our audience at a level of just knowing like, hey, not trying to make it seem like anyone can go in here and learn this and just put your house on it, like what you guys were talking about earlier. But like, it is achievable to learn this over time. And if you take a conservative mindset on it and you don't try to cheat the system, you don't try to just become a millionaire day one on it, but you really study. I mean, I still to this day say that options is one of those things. The more I learn about it, the more I know I don't know anything about it. Like it's
for sure.
It's a constant growth. So I'm glad that you guys have felt that, and hopefully the audience has felt that as well.
Well, I think, you know, I'm very thankful as one of the, you know, just been around longer, but I've learned more the last 2-3 years from a lot of you guys, Option Omega, from you guys, from Mark and Tammy, and over at Navigation and many others, because I like it because they're honest. I mean, they give you what it's like and you can go forward. I remember somebody asked me when I came out of the trading pits and I started teaching, they say, it seems like you share everything on your mind. And they say, why don't you keep secrets? I said, the only secret is this is a tough business. And so you know, the fact that even if you tell somebody, you know, I mean, Matt and Troy and Russ, they'll give, this is how we did it. And Mark is giving, this is how we did it. And Tammy and Navigate, they're all doing that.
Yeah.
But you can't, how many people go out and duplicate it? They need that help. And so that's just a start. Like you said, Mark obviously told you what it was right away.
Yeah.
But you had the knowledge, but the experience needed to catch up to the knowledge, right?
100%.
So I'm very thankful for, you know, in the YouTube now, everybody sharing. So it's like you get enough information that you can go on. And that's why, you know, it's nice even with backtests. Matt sometimes, you know, I'll be like, give me the stinking backtest. And he's good and say, Dan, go wrestle with it a little bit. And it makes it much better.
Yes,
you does. Get through, because you don't want the, you know, it's not good for you. So I appreciate what you're doing, and Mark, and thank you.
Well, listen, we I think some CPI number came out, so we're up 44, and that's awesome for people who don't like the market going up. Just another day in paradise. So I will let you go, guys, on that, and I hope you have a great trading day. What is gold at real quick? I always like to do a gold check. You know, gold kind of drives the market.
Oh, I think gold down was what? Wasn't it down a little bit yesterday?
It was down. It was down a bunch the day before, and then it like rallied a bunch yesterday. We're settling in a little bit, down 11. So,
Troy, is this a day for trading places saying for you, sell, Mortimer, sell? Probably not.
When you listen, when you have a day like when you're at VIX 25 and you have a 9-point. VIX is going to be at 16 by the end of the day, barring anything crazy. That's
weep.
That does not help my trading style. I'll put it that way. So, anyway, all right, guys. Listen, have a great trading day, and we will see you Monday. Connor, thanks so much again. Connor, real quick, where can everybody find you?
You guys can find me on LinkedIn. If you guys ever have any questions, just reach out to me on that. I always try to answer as many as I can. And you guys can find me on Discord as well. It's just my name. I'm pretty sure it's just Connor Talley, and you guys will see me right there. Connor_Talley. You guys will find me on Discord. Ask me any questions. Happy to help however I can.
That's awesome, dude. All right, man. I appreciate you. You guys have a good weekend.
Thanks, guys.
Have a good one. Take care.